What's good, YouTube? Welcome back to the channel. Today we have another live stream. We're really going to focus on Zomedica. And for those of you who aren't familiar with it, Zomedica is really a vet health company. So they really focus on small animals and equines or horses. And they're expanding their base of offerings to kind of become more of a holistic brand that can expand beyond just the traditional modes of health and vet success. Before I even get into it, I'm going to start playing this banner here. This is not financial advice. Anything you hear today, please don't just go and make your own financial decisions based on this. Maybe it can help influence it, but make sure you consult with a dedicated financial investor. For all intents and purposes, this is entertainment only. All right. And also, if you don't mind, make sure that you don't forget to hit the like button on this video and subscribe so that I'll do more videos like this in the future. I know a lot of you have asked me to come on and do a lot more Zomedica content. It's kind of challenging with my job, but these live streams actually make it somewhat easy to do it. So let's go into Zomedica and just talk a bit about the price first. So I hope everyone can see this. This is the chart for Zomedica, which is listed on the New York, on the NYSE exchange. About a week and a half ago, we heard some phenomenal news around a price target of $6. I'm sure many of you remember it. I did a live stream when this happened. I think that was right here. And what we talked about that day or that night is really that I didn't expect Zomedica to continue to go up. And honestly, what we saw happen after the fact was exactly what was in line with that. The stock started to come down because we're not in an environment where there is risk on activity, right? Typically, for a stock to do well, you look at multiple factors. Number one, how's the company doing? In Zomedica's case, it's fantastic. They've really righted the ship ever since they got the PulseVet acquisition. It's been a completely different company. Number two, how's the actual macro environment doing? It's actually horrible, right? Think about it. Inflation rates, the rate of inflation has not really turned around. It may have been minimized slowly, but we're still seeing growth in inflation, albeit maybe it's not as big a growth as we're used to seeing. But you know what? The Fed is still saying that they're gonna raise the interest rates over time. Until we start seeing interest rates come down, there is no reason to be all in on companies as speculative as Zomedica because these companies do well on a risk-on environment. Okay, so looking at Zomedica, what we can clearly see here is Zomedica is sort of trading range bound. So I'm just gonna kind of zoom out slightly, and you can see how Zomedica has been doing for the last little bit. The last time we've even come close to breaking this barrier of 33, 34 cents was back all the way in August. And August was really the point of probably the stock market peak last year, ever since it came down in the summer. This is where the stock market peaked out before the Fed said, actually, we're going to keep raising interest rates. And then the stock market started to plummet. And you sort of see all these like red price movement. You just have huge slope down all the way to 15 cents. And, to Zomedica's credit, it held a 20-cent range for quite some time, finally broke through this, went to 15 cents. And I remember back then, I used to talk a lot about actually loading up shares here. And, over the course of the last few months of the year, I added 5,000 swing shares. As you guys know, I sold 3,000 swing shares around 28 cents. And I have a price target of 35 cents for my last 2,000 swing shares. And I'm still holding 10,000 shares, for the long term. So we're getting close. But what you can see here is Zomedica is not really doing that well when you compare it to the rest of the stock market, right? So today, the NASDAQ was up 282 points. SPY was up like 2%, 73 points. Crypto was doing pretty well. Like Bitcoin is doing phenomenal, up 8%. Avalanche up 7%. Stock market is pretty much very, very green. But then when you look at Zomedica, it was the only red, it was the only negative growth or kind of declining in value in my portfolio. And I'm not surprised by this because Zomedica makes up a specific component of my investment portfolio. I tell you all the time, I don't make more than 20% of my portfolio into speculation. I have a lot of money in companies like Apple and companies like Disney. You know, the 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 technology that I'm using right now, I'm using a sort of Apple keyboard, an Apple trackpad. I have an iMac here that I'm actually shooting the video from. I have like an iPhone. Granted, it's a kind of broken screen on it. But I really believe in the Apple ecosystem, and it's really a safe place to put your money. And honestly, Apple, in my opinion, is a way better deal than Zomedica at this point. But no one's looking up Apple on YouTube. But if you can get Apple at $120, $130, that's a really, really good deal compared to like what it will be in the next 5 years. Apple is likely one of the biggest, it's probably one of the safest companies out there. Once again, not financial advice, but you guys are here to watch about Zomedica and learn about the potential that it has because unlike Apple, Zomedica can 10, 20, 30x their price. And I think that is what really is the hook for many people. Okay. So now that we've gotten all that out of the way, before I even get to the news, because there are 3 news topics I want to cover, what I will say is I will expect more of the same Zomedica trading within this range. I was actually surprised to see Zomedica pump over the last couple of days. So, like, if you look over here, it almost broke through this Wednesday at 33.4 cents. We may see it retest over here again and then come back down. What you should know is the reason that you see sort of these like lines, and typically like you'll have a range where a stock will trade, but they never get beyond that price ceiling. It's because there are sell orders. There are so many sell orders up there. So every time the stock goes up, it hits this, it bounces off, it hits this, it bounces off. And every time it hits this, sell orders are being executed, right? Until all the sell orders are removed from that block, it won't pass that price. And this is why technical analysis actually has a big sort of play in how a lot of traders do their analysis, right? There's a big reason why people like drawing lines on charts. It's not magic. It's actually referring to the buy orders and the sell orders that are still existing that need to be fulfilled before the stock can either go higher or lower in the case of either buying or selling. Okay. So long term, I wouldn't rush on loading up a ton of Zomedica. I think the optimal place to load Zomedica is under 20 cents. That's where I'm loading. And I will be looking to sell Zomedica at 35 cents or higher for my swing shares, right? So that's the financial component. Let's now talk about the company because I think I'd be remiss if we didn't talk about 3 big updates. So the first update is Zomedica taking control of new assay development and manufacturing of truforma product line through like a change in their licensing agreement with Corvo. This is huge, and we'll talk about that right now. So let me find the article. It's right here, and let me zoom in so you guys can see it. Okay, I'm just going to verify that you can see it. And for those in the chat, welcome. I'm going to try to make sure I'm talking, but every so often I will come back, and if you say something in the chat, I will respond. So, please don't troll if you can afford not to. I mean, you can. I'll just ignore that. One of the things that we did see last week, I had people comment on the last video I did on Zomedica. And even though in that video I said there's a price target of $6, I don't really believe in it in the short term, and I think the stock's going to go down. I had people who didn't even watch the video who commented that I can't believe you're pumping the stock, which granted, if you watch the video, you would actually see that I was actually doing the opposite. I was trying to bring reality into it. So, hi, Timothy. Welcome. So, this is very exciting news that Zomedica is actually changing their relationship status with Corvo. And I'm just going to read this out. So this is an exciting milestone for Zomedica as it provides us control over the development and manufacturing of our truforma products. As we build our installed base of truforma instruments, each new assay we develop and launch represents an opportunity to seamlessly integrate it into the customer's diagnostic armamentarium without incurring new customer acquisition costs. These agreements will be able to directly increase investment as appropriate to bring more assays to market faster while reducing our per assay development and manufacturing costs. These strategic agreements highlight Zomedica's continuing commitment to working with industry partners in flexible ways to bring around innovative products to vets that provide clinical value and enhance practice economics to the animal health industry. So, what that actually means, right? Like, there's a lot of verbiage. When we're looking at a company like Zomedica, we're always looking to make it profitable, right? Zomedica has done a ton of share dilution, right? They're sitting at almost 1 billion shares. Now, what happens is every single quarter, despite how much revenue they were making, it would be a net loss. And if you look at the net loss equation, there are two ways to make a company profitable. Number one is to increase your revenue, right? So increase your sales of Truforma, the cartridges, increase your sale of anything PulseVet related, or commercialize new products, which we'll get to in the next article. The other thing you can do is reduce your expenses. So Qorvo is kind of the thought leader around the bulk acoustic wave technology. They're the ones who developed all this. Zomedica was really licensing the agreements to use all of this. And because of this, they're paying like royalties, and they have a ton of expenses every time they want to manufacture a new line, right? This really limits what Zomedica can do. Long term, by going through this approach, they actually reduce their expenses. And by reducing their expenses, their revenue can stay the same, but their profit margin or their profit will increase, right? So getting from a net loss to a net profit. And that is literally the goal of every company, right? Get to a point and use your runway and use your cash to build a business that's profitable. And Zomedica has a lot of time, because when I play the video on the investor conference, you're going to see that they're burning $4 million per quarter, and they have something like 150 or 160 million dollars in cash. That gives them like maybe like 10 plus years, maybe 20 plus years to get their act together. And obviously for us, we want them to get their act together sooner. Okay. So under the agreements, Zomedica will take control of aspects of the Truforma product line previously provided by Qorvo, like I just said, including development of new assays and manufacturing both instruments and assay cartridges. One of the really important components here around Truforma, and for those of you who don't remember, Truforma was actually Zomedica's claim to fame back in 2021. When everyone was excited, it was around a March 31st launch, or March 1st, I can't remember, launch of Truforma, a really cool new diagnostic tool where you were able to take samples of blood samples, I guess, from a pet, put it into a cartridge, and you were able to test for various disorders. And it would be a lot of time saved on the part of the lab, and a lot of time saved for the clinic. And that would also result in cheaper diagnostic tests for the pet parents, like the owners of the cats or the dogs, and they would find out sooner. And that could potentially be very life-saving. So there was a lot of excitement in what Truforma could offer. And what was really neat is Truforma was actually a business within a business, in that while you could sell the device, you could also sell the cartridges. And the cartridges are like a subscription service, right? The more tests that are used, you end up kind of like you sell one Truforma unit, but you keep selling cartridges. So they call it the razor and the blade business model, right? You continue just getting repeat business from those customers if they believe in it, if they use it. So it's pretty good. I think there's also potential for clinics to upcharge on these tests. So that's another reason for clinics to adopt it. And for the most part, clinics last year and maybe the end of the year prior were actually part of a testing program where it's called the CAP initiative, right? Customer Appreciation Program, where they were given Truforma products to install in their clinics, and all they had to do was pay for the cartridges. And the idea was eventually we would pull back, or I don't know why I'm saying eventually Zomedica would pull back those Truforma devices and they'd have to buy them themselves. But at that point, you've already gotten attached, right? It's like those trial subscriptions to like Amazon Prime. Eventually that necessity becomes so like you're so used to it that you can't like live without it, and there's not a better solution. So it's really like to build trial, kind of build loyalty, and kind of ingrain themselves in the patient journey. Sorry, I'm still a little sick from last week, so I may be coughing throughout the stream. So continuing on, this positions Zomedica to invest in accelerated development of new truforma assays and to improve margins once it begins manufacturing directly. So once again, going back to what I was just saying, improving margins is what's going to lead to improved profits. And also, we don't have to wait for another company to start looking to build more lines. The more lines you have, the more different types of cartridges you have, and those cartridges can all be different revenue streams, okay? So Zomedica will provide upfront licensing and certain milestone payments, including the option to extend exclusive rights for truforma in the vet health market in perpetuity. A related agreement provides Zomedica the right to purchase bulk acoustic wave sensors from Qorvo for inclusion in truforma products. Yeah, we already know that. While Qorvo will continue to work with Zomedica to develop the assays currently planned, including the first assay for the equine market and several assays for the non-infectious GI disease, Qorvo has agreed to provide technology transfer assistance to Zomedica so that Zomedica can undertake all future new assay development for the truforma product line. And then they will also install manufacturing capabilities at Zomedica's global manufacturing and distribution center. So Zomedica is going to have control of development, manufacturing, and commercialization of the entire truforma product line once this is done. And approximately, it will take 18 months. So this is phenomenal news. Like I said, it's going to take some time to get it in place. But remember, we're not investing for the short term with Zomedica. Zomedica for me is a multi-year investment, likely 2 to 3 years at this point. As well, we want to make sure that the economic climate's much better. But let me tell you something. When I first got into Zomedica, and I initially bought it in the mid $1 range, and I sold it when it went to 270, I believe. I think 260, 270. When they announced that truforma's launch was pretty subpar, and I got out right away. And much to the chagrin of many YouTube shillers out there, like Chris Sane, who were telling people, "No, now's the time to buy it. 270. Let's go to 10." And look what happened, right? What I remember is the people in that time period who made the most money were the ones who bought Zomedica at like 10 cents. And now there's an opportunity to do that. There's no rush, of course, because I think we're going to trade like this for the next year at least. So I am just continuing to add to my position over time. And I'm looking for good opportunities to do that. In 2021, in 2022, I was profitable on Zomedica. 2021, I wasn't, because I had lost. Like, I at first made a bunch of money, but then I was in the negative because I had bought the shares back and I kept averaging down and the shares kept going down. But now, as of 2022, I'm net positive again on Zomedica because of the swing trading that I've been doing, right? Every time the stock comes down, I would buy some, and then I would sell that position back every time the stock went up. And I've been doing that. It seems like these ups and downs happen like over every 3 to 4 months. So there's always an opportunity to load up your bags and kind of let go of them. The way I like to look at it is I'm like a farmer. I plant my seeds when the stock is going down, and then I harvest it when the stock is going up, right? And I still hold on to 10,000 shares as a base because I want to have those shares. My cost average there is like 26, 27 cents. I want those shares so I can sell those when Zomedica is like $2, $3 in the future, right? And I don't want to end up selling it and something randomly happens where the stock just keeps going up. Like, I would love for that to happen. I just think the probability is very low in the short term. I, of course, would hate to miss out on that, which is why I refuse to sell the 10,000 that I have instead, okay? So this is the first news, which is very, very positive. What will happen at the end result of this agreement is we're going to start seeing Zomedica's costs coming down. Okay, so that's huge news. The next news I want to talk about is Vet Guardian, right? So Vet Guardian is another product line that Zomedica started to offer, and they announced on January 17th, so that was on Tuesday, that they're going to start commercializing the Vet Guardian Zero Touch Vital Signs remote monitoring system for vet professionals. So remember what I talked about, right? We're looking at net profits, right? Or net loss, net gains. In order to have a net gain, more revenue, less expenses. Those are our levers, right? We can only control revenues and we can only control expenses. So if we're going to continue, if we're going to commercialize something, we're adding another revenue stream. So this is very, very big. So what they say here is the Vet Guardian system is the first and only for the companion animal market that enables contact-free continuous monitoring of pets' vital signs, including temperature, pulse, and respiration. The Vet Guardian can capture vital signs in real time without harnesses or wired leads on the pet, thus allowing pet parents to rest comfortably during recovery at vet facilities. The system is easily set up by clinic staff and connected to the cloud using a smartphone app, after which monitoring of multiple monitors on a single screen is enabled by the connecting to the Zomedica web portal. Okay, so vets are gonna get this real-time notification if vital signs start to come out of the range they expect them to be. And honestly, this is actually a very good solution because vets are sort of overworked and understaffed, and it's going to help improve patient care through Vet Guardian, reduce patient stress, improve the vet staff safety by avoiding unnecessary contact while still being able to monitor those pets 24/7, right? So Zomedica is really doing some phenomenal work here, expanding that relationship with SMP to begin the commercialization for the system. Once again, Zomedica has gone from a company that basically monetized Truforma, and they monetize it through investors, right? Like in 2021 or 2020, actually no, it was 2021. They were super excited about Truforma, and all these investors came in. They sold a bunch of shares and diluted their investors, right? Thankfully, they've been using that money in some incredible acquisitions, and those acquisitions are actually what are saving the ship because Truforma is still not really selling, and we're seeing slow trickles and we are seeing slow adoption. And honestly, it's almost like a year later from the last time I did a full analysis on Zomedica and Truforma. But if it wasn't for PulseVet, the ship would have already sank, in my opinion. Like I think a lot of people would have moved on. I think the PulseVet acquisition is incredible. Vet Guardian is another incredible addition. We want to keep seeing more of those M&As, and that's something that Larry Heaton talks about in his presentation. There's a virtual conference that just happened, and that's the last thing I want to go over today. So what we're going to do is I'm going to play it, and every so often when there's something relevant, I'm going to stop and I'm going to talk to it. Okay, so let's go there. It's right here. So I've already found. So just to be clear for everyone here, margins are very important because what it's saying is if you made $1 in revenue, your profit potentially would be, if it's 75%, your profit was 75 cents. So this is a high margin business. High margin businesses allow you to employ way more services because you have a lot more buffer room. If instead for every dollar Zomedica was making 1 cent, that'd be a 1% profit margin, and there would be so little leeway. And that is the difference between a profitable company and or a potentially profitable company and one that's not, right? You want a high margin business. Visa is a high margin business. You want to make sure that the higher, like if you can keep your margins really high, and I think Meet Kevin has talked about this as well. The example he used is an ice cream cone. Okay, let's say you were selling ice cream cones for $5, but your cost to create the ice cream cone was $1.50, then your margin is $3.50 per ice cream cone. That allows you to invest in more locations to kind of expand your business, hire people to do your marketing, hire people to like create things for you, develop new ice cream flavors or something like that, right? Now imagine that instead, when you sold an ice cream cone for $5, because you have to pay your employees and everything else, maybe it's $4.50. Then your 50 cents is the only profit you're taking away from those $5. That's a 10% profit margin. There's a lot less that you can do. So Larry is talking about margins very specifically because it is what they're aiming for. They were aiming for a high margin percentage so that when they're profitable and they get their expenses down and everything else and continue to improve their revenue over time, this will really allow Zomedica to grow and flourish. And when it does, we will capitalize on it as investors. Okay. So Rudawig or Rudawag, maybe I'm saying it wrong, been holding since 1.5 years now, and I keep buying more whenever I get a chance. Yeah, I completely agree. The one thing I would recommend is, you know, look to buy it. Look to buy Zomedica near the bottom end of kind of its trading range. So I look at 18.5 cents and below, maybe even 20 cents and below is a really good buy opportunity. But then also like consider taking some profits off those shares. So if you buy like 2,000 shares at 18.5 cents, sell those back when it goes to 25 cents to 30 cents, and then buy it again when it comes down. And this is how I've been making money when the stock hasn't really moved like that much. It's been going like this, right? And because it's going like this, I can buy at the bottom and sell up here and keep doing it every time. And honestly, I think this is probably one of the best ways to trade in a bear market, right? Like you have your core set of shares that you're holding on to for the long term, but then you have something that you're kind of making money here and there, so you feel like you got the W. Okay. The one other comment I would make on the leadership team that he talks about, Zomedica has done a good job hiring industry experts, right? So IDEX Labs is probably one of the big competitors in the pet space, um, and they've hired people from there. And if you look at the exec team, pretty much no one is there from 2 years ago, or very few people are there from 2 years ago. There's been a complete shift in that management team. And with that shift, and with Larry Heaton coming on and the PulseVet acquisition, Zomedica has gone from being a sinking ship to one that I truly believe will soar in the future. Okay, so let's continue. So this is very important. So just to reemphasize, they just said $150 million in cash on hand, and they're burning $4 million, right? So if you take 150 divided by four, and that's per quarter, right? That gets you like a little over 35, I think, a little over 35 quarters. So that would be almost like 9, 10 years, right? It is so it is so important. Oh no, what am I saying? Yeah, it's 9, 10 years. What is so important here, right, is really understanding that they've got a lot of time to right the ship, and they've already righted the ship. I think what Zomedica has to do now is just ensure that over time they're just showing constant improvements, right? Are we expecting Zomedica to be profitable next quarter, next earnings report? Of course not. I mean, I would love it. I don't think anyone here would disagree with that. But I think that the real goal is just let's see expenses come down and let's see revenues go up and let's see that trend consistently. At a certain point, they're going to break that barrier, which is profitability. And at that point moving forward, every single quarter, we're going to be banking cash. And then when we start banking cash, we're not burning it, right? So I think by looking at it from this perspective, we actually have an opportunity to grow. And this is why I have been stacking shares in this company. If this company was sitting here and just burning cash and just going, oh, I don't know why things aren't getting better, I would sort of just, I would have thrown in the towel, taken this money and just put it on Tesla, which is, in my opinion, another undervalued stock at this point. Hey, Grady, how's it going, dude? Good. Thanks for coming. Let's continue. See, no problem. Yeah. So that's actually very, very important. I hope you caught that $3.8 billion of addressable market. That represents the opportunity that we have, or Zomedica has, to capitalize, right? And he's going to break it down on the next slide on how much value there is. But it's so important because it speaks to, if Zomedica is successful, how much can they capture annually? On top of that, they're like, here's the other thing, right? You don't want to just have value that's recognized that you can't get more of. 2.5 billion of that they can recur as well, right? Interesting. So you guys can't hear the video? Okay. That's good to know. I thought you could. It's so weird. You know what? So what I will do is, if that's truly the case, I will put I have the link to the video in the description. Maybe I'll just talk to some of the highlights. Okay. So thank you for bringing that up. I have to look into why it's not sharing that, because it should be. What Larry had just said, right? And I'll just kind of talk to it. I'm just gonna go back one slide here. Um, they they talked a lot. Sorry, Grady, you can hear the video? Can you hear me or can you hear the video? Yeah, so hey home. Yeah, so if you can't hear Larry, there's no point in me playing this video. I have the link to the video in the description. So I'll just talk about like some high level points, okay? Um, what I will say is Zomedica's growth by acquisition, you can really see here that you have um, you know, the five kind of key deals, right? Truforma being the first one, right? And Truforma, yeah, it says 365% year over year growth, but that's like, you got to look at the base, right? It was very small. They really weren't getting much traction there. PulseFed, on the other hand, was a significant component of the business. You know, It only cost $71 million to acquire, and they are making tons of cash every single quarter. That has grown 35%, and that's actually a significant number. When you look at the earnings calls or the earnings reports, almost like 95+% of their revenue has been coming from PulseVet. And with just commercializing Vet Guardian and having a CC on the way, or I'm sorry, not a CC, a Revo on the way, this is more sort of revenue streams that are coming to fruition. Okay, so I'm not going to go through everything here. I'll let you watch the video. One of the things that Larry talks about later is he would be open, if the company's doing well, to a reverse stock split. I think that's the worst idea possible. Personally, I would go down the path of looking to buy back shares. When Zomedica needed the money, they liquidated their investors by issuing a ton of shares, right? What I would prefer to see is if they buy back shares instead, you will raise the price of each share that's remaining. One of the things that I hate about reverse stock splits is when you have a reverse stock split, typically stocks will sell off. This happens all across the board. Mind Medicine is a stock that did a reverse stock split. I think it was August 26th, so somewhere here. And right after the stock split, it went, I think it was 40-1 reverse stock split. It went from $15, which was its new total, all the way down to $4.39 within a month. So it went down over 75 to 80%. These are sort of like the things you want to avoid. I don't know why reverse stock splits seem to have this sort of effect, but they don't really inspire confidence. In fact, most of the time reverse stock splits are done to keep a stock listed on an exchange. And, I think Larry used the excuse of it being more attractive to institutions. Well, I'm sure institutions would be loading up at 15, 20 cents, 30 cents if they believe in the company, because they're just going to buy in volume. Grady, Tesla looking interesting to get in. Yeah, I think Tesla's one of those stocks that you just want to stack, right? You just want to make sure you keep stacking. It makes up a significant part of my stock investment portfolio. Tesla, Apple, Disney, and Microsoft. Those are huge tech companies that are very big discounted. Tesla, of course, is a little more speculative because of everything going on with Elon Musk and Twitter, although that's somewhat died down. So Tesla's kind of stopped that kind of rock slide, and hopefully we see it go back to 300 plus soon. Maybe a good buy point. Yeah, so I think what you're saying here is that you can hear me on YouTube, which is great. I want to make sure they can hear the video, right? So I won't really go through the rest of the video because that was really the high level talking points. It's that Larry, I don't want to say of course a CEO is going to believe in their company, but remember, you're not just buying one business when you invest in Zomedica, you're investing in 5 and potentially more businesses. And they've been using the money that they had through the share offerings to build out their offering. And by doing, they're just constantly improving. So what you should be doing is looking at the earnings reports to see how you can make sure that the company is actually, 1, increasing revenues, and 2, reducing expenses. Doing this for long enough, I'm telling you, they will become profitable. This is my belief and my conviction, which is why I continue to, hold my Zomedica shares, and I continue to make videos on the company. I wouldn't be making videos on this company if I didn't believe in it, right? And you can see here today, as a reminder, Zomedica was the only stock in my portfolio that went down, right? I even have AMC, but I bought AMC at below $4, right? Look how well the stock is doing. And this is another reminder. One thing I will say is, let's just zoom out a little bit. AMC is a great example of a stock with a cult following and a mob mentality, let's say, where people will tell you not to sell it. And I bought it in this range of $4 and below. And you can see here, it didn't really fall below that beyond the first initial pump that we had with that entire GameStop movement. So my whole thing with saying this is, whenever you're investing, don't listen to me. I mean, don't listen to me. Don't listen to anyone. always take your, like, look for opinions, look for guidance, and like get information, but the final decision is on you. If you don't agree with any of the stuff I'm saying and you're like, hey, look, you know what, this guy's an idiot, I think he's wrong, I think Zomedica is going to go to $20, then that's your call, that's your opinion, and it's your insight. My only thing is, at a time like this is a time when you shouldn't be taking as many risks because the market is trending downward. So you're fighting the trend, right? Like, in this time period, stocks are more likely to go down than go up because the overall trend is down, right? It doesn't mean stocks can't go up, but you're fighting the trend, right? And that's the real reason why I'm always saying, no reason to jump all in, no reason to stack everything. You have time. I think we have another year or so to stack Zomedica, stack Tesla, stack whatever. So take your time, do your research, and figure out what works best for you. Make sure you watch the video in the description below so you can kind of get a better idea of what's going on. And for next time, I'm going to make sure that I load these videos into StreamYard so I can play them for you, versus like that way it'll play for you within the system. The only challenge with that is if I click off it, I won't be able to like open it again. So I got to figure out how to make that work, or how to make StreamYard kind of load all of that. If you enjoyed today's video and you enjoyed the content like this, sorry, wrong banner. Make sure you don't forget to like and subscribe. Share this video. Like, if you believe in Zomedica and you know someone who's like anxious about it, or kind of concerned about their price, or they're just sick and tired of holding a stock that's really only been going down for the overall last couple of years, send this video their way, because it's not as clear cut as that, right? Like, I think people have got to have more of a long-term approach, and the news articles that we're getting, like I'm saying, make sure you go to the investors.zomedica page, check this out. Look how many news articles we're getting recently over the last like week and a half. We've gotten 3 here, not to mention that $6 price target from that other company, right? This is all positive news, and these are all positive catalysts. And let me tell you, if we were in a bull market, these kind of news would have made the stock go up like 30+%. But because we're in a bear market, that's not happening. Okay. So just make sure you have like investors at Zomedica bookmarked. Make sure you join sort of like the free public Discord. And I put that up here. And the reason I say that is, if you ever have any questions about Zomedica, you're thinking about something, or any other stock, and you just want to chat with myself or others, we have a lot of people in that Discord who can support you. So, because sometimes I just can't make a video, I won't have time. At the same time, I want to get to a point where I'm making a weekly stock kind of market video where people can hop on and ask me questions about any stock. We'll focus mainly on Zomedica and others, but I want to give people time to ask me about any stock they're curious about. We can bring it up and chat. So that's pretty much all that I have for today. I hope you enjoyed this video. If you're watching on the live, thanks for joining live. If you're watching after on YouTube, thank you for watching. Make sure you smash like, make sure you hit subscribe, and I'll see you next time. Thank you.